Again, we have just around 55 minutes to go until the bell. The Dow still off over 250 points. S&P off just around 0.6%, as well as the NASDAQ. We have Matt Maley. He's the managing director and equity strategist at Miller Tabak here to help us break down not only today's action, but what we've seen over the past week or so. And I guess, Matt, when you take a look at today's action, at least energy, financials, materials, those stocks are clearly not working in today's market. Why do you think that's the case?
Well, it seems to be that nothing's really working all of a sudden. I mean, and I don't want to overstate that. That's too much of a broad brush. But we're also seeing tech stocks, especially the semiconductors, get hit pretty good. But the thing is, we have a situation where people are starting to suddenly worry about this, the coronavirus again. I mean, people are thinking, oh, geez, this is something we might have to worry about in the fall. If when flu season comes back, will coronavirus season come back? I mean, nobody's really looking for a complete shutdown like we saw last year. But will it be enough to create a situation that will, slow things down? Well, suddenly this seems to be coming sooner than we thought, not just, in the southern hemisphere where it's wintertime, but also up here. And so people are starting to raise those concerns. And the market is expensive and a little ahead of itself. So I think some people are taking some chips off the table in a relatively broad way today. And I kind of can't blame them for that, to be honest with you. But again, we're not that far from the all-time highs.
Matt, great to see you. You mentioned taking some chips off the table, and you also mentioned semiconductors. So I want to drill into that. I'm looking at the Wi-Fi Interactive here. These are the losses that we're seeing today. NVIDIA's down 4%. You take a look at what's happened this week. Pretty ugly. NVIDIA's down 9%. As you note, this is a leadership group. So what are you seeing here?
Yeah, this is definitely a concern. There's no question that the chip stocks or the semiconductor stocks are a key leadership group, not just for the whole technology sector, but for the overall market. And the fact that it hasn't been able to break out the little divergence in the last month or so between the XLK, which is the more broad technology ETF, that has broken out nicely. But we haven't seen that in the chip stocks. And the one thing that people were still saying, oh, look at the chip. We're talking all this stuff about chip shortages and what does this all mean? But really, it was NVIDIA was really the only stock holding up this whole sector for several weeks. It got extremely overbought. It's starting to roll over. I mean, it's still a great company, but as we all know, the stocks of great companies can get ahead of themselves. Now you've got Taiwan Semiconductor disappointing on their earnings and NVIDIA coming down. Those two stocks make up 25% of the SMH tech ETF. And again, it's causing some more problems. And Micron's starting to break down. So on a technical basis, you're seeing this group start to come in. I think that's another reason why people are getting a little bit nervous and taking a few profits here in front of the weekend.
Matt, we also heard from Fed Chair Jay Powell this week. He was saying he's watching the higher inflation, but he still sees tapering as a ways off. He doesn't see the Fed acting anytime soon. I guess from your perspective, when should the Fed act? Should the Fed act sooner rather than later?
Well, I definitely think they should. I mean, whether they will, and I do think they will, as a matter of fact. But I definitely think they should because we're no longer in an emergency situation. I mean, a year ago or 15 months ago, March of 2020, we had emergency in the economy, obviously, almost completely shut down, and emergency in the fixed income markets, which have basically frozen up. So now, I mean, we want the employment to get better, and that's fine if the Fed wants a better employment, but it's not like that's an emergency case either. So, they don't have to completely shut it down, but I do think they need to taper back because we're no longer in that emergency situation. And the reason is that, again, inflation, if that becomes a problem, it's going to be hard to fight that off if they move too late. But number two, you also have worries about creating an asset bubble, which with all the leverage in the system right now, if it bursts, it's going to be much harder to recover from a bubble later than they would right now. So I think they definitely should be moving sooner. It's really a situation where they're causing more problems by leaving this liquidity as strong as it is, rather than pulling back on it.
Well, Matt, I want to focus on the narrow leadership that we're having, especially in the NASDAQ. I have on the Wi-Fi Interactive here a chart of the NASDAQ along with the NASDAQ Advanced Decline line. So we have the NASDAQ pretty close to record highs here, but very narrow leadership. And you can see this trend I'm drawing here. It is to the downside. How concerning is this?
Oh, it's always a concern whether that happens, and of course, sometimes that can last for a period of time. But this is exactly what we saw last summer. Really, more in the last. It was happening more in August than in this year. It's happening in July. But we know what happened is at the very end of August, and we move into September. We had a correction. I mean, we all kind of forget that we did see a correction in September of last year. It feels like the stock market has gone straight up from March 2020 till today. No, we did have a correction back in September. The S&P went down about 10%, and the NASDAQ went down 12%. And we seem to be setting up for that same kind of pullback. Whenever you have a narrow rally, I mean, flip it around and say healthy rallies are ones that are broad-based. When there are fewer stocks leading the way higher, it's a sign of a less healthy market, and probably going to lead to some sort of a pullback. And of course, though, pullbacks are normal, they're healthy, but the people do need to be wary of them.
How big of a pullback, Matt, do you think we could potentially see?
Well, we'll just have to. We'll see. I think we could see certainly something in the 10% range, which is, I guess, technically a correction. The one thing I do worry about, though, is that there's a chance we get a surprising one and a deeper one that could go down as much as 15 to 20%. And the reason why I say that has nothing to do with the fundamentals or concerns about a recession or things like that. But what we have is we have a record levels of leverage in the system. Margin debt is at an all-time record high. And what happens, that doesn't become a problem until the market rolls over. I mean, you don't get margin calls until the market has gone down 10 or 12%. So if the market goes down 8% or 7 to 8%, we should be fine. It gets down 10 to 12%, then the margin calls kick in, and it automatically, no matter what's going on in the economy, it automatically becomes a deeper correction. So people need to be a little more careful, maybe not right now, but certainly as we get into those fall months, which sometimes give us those scary pullbacks. But again, corrections are normal, they're healthy, and they create unbelievable opportunities. So embrace them. Don't be afraid of them.
Matt Maley, thanks so much for taking the time to join us of Miller Tabak. Have a great week.